Let's welcome on board C. Rudramurthy as well as Devang Mehta to talk to us more about the market mood right now. Mr. Rudramurthy, what's your take on the market right now? A solid recovery underway, but A, is it sustainable, and is 24,000 a solid base now?
Looks so with whatever moves we have seen in market as of now, yes, there has been a very strong support now at around 23,800 zones, and even on Bank Nifty 51,000 is a very strong support. And whatever bounce we are seeing from those strong support zones, yes, we have to see this continuation of the up move for another day or two, and we have to see whether the 24,500 will be taken off or not. So for me, I expect markets to remain in a range for some time, and we should see some amount of time-wise correction. And yes, this range of 23,800 to 24,500 should hold for some time, and we have to see some amount of outperformance, especially in private banks, and also we can see some amount of buying happening in good quality mid and small cap where we have seen enough correction. So yes, markets will be now more range bound, and also some amount of time wise correction will be seen in index. And I am very bullish on private banks, especially HDFC Bank, and even ICICI Bank can do good. PSUs are also looking good, and yes, in that the order will be SBI and then Bank of Baroda. And yes, even metals can do good there. Look at stocks like Hindalco, Tata Steel, Vedanta. So these are all stocks where you have to be very choosy, and then these outperformance will continue for a day or two.
Okay. And Rudra, are you identifying any stocks that you think wherein the selling must have been overdone and you can now buy from a slightly longer term time frame?
See, definitely, yes. If someone wants to take a medium to longer time frame from here on, still private banks look very good. Look at HDFC Bank and ICICI Bank. These are my top two picks. And even in PSU, one can look at both SBI as well as Bank of Baroda. And if you want to buy currently, for me, even from metals, Vedanta looks very strong. And after a long consolidation, stock is now giving that up move. Looking at initial target of 485 to 500 on Vedanta, one can have a stop loss of 465 for this long call, and one can also look at buying Voltas. Voltas looks very strong today. Open interest addition is seen on the positive side. Look at targets of 1,735 to 1,750 on Voltas, and one can have a stop loss of 1,675 for this long call.
Yes, Voltas was also one of those candidates which can get MSCI inflows. Of course, we'll get the information on 7th morning. Somit was highlighting the few stocks that are likely to get inflows. 5 additions is what he had said that the street is penciling in. We'll try and get that data up for you. But in the meantime, Devang, there's a lot of expectation from the primary market. It's going to be a week of almost 18,000 crore plus of fundraise happening in India because there are 4 major IPOs lined up. Of course, Swiggy, Afcons and a lot many more. What's your view on these if you have looked at that?
Thanks, Anisha, for having me on the show. I think no particular view on the upcoming IPOs, but honestly, to tell you the truth, the IPO market has been buzzing, and we have seen a lot more capital being raised in the last 1.5 to 2 years. And most of the, if I can just generalize, most of them are trading at a valuation which is sort of higher than what it was kept on the table during that time. I think the supply of quality paper is something which I think excites me. Of course, you know that there was a bubble in the SME sort of IPOs, the very smaller size IPOs, where a lot of money was sort of just trying to be raised because the markets were doing very well. But I think most of the IPOs which are right now coming are either offer for sale. The second one is, of course, some of the money is also raised to sort of support the business. But I think particularly about the Swiggy and other companies, these are all great companies. There is a complete duopoly. If I compare Zomato and if I put Zomato and Swiggy together, it's a duopoly right now. So I think most of this, of course, if market remains a little more, I can say vibrant, the secondary market remains vibrant, this primary markets will find good listings, and most of the quality paper will get absorbed.
It's all about the quality of the paper, and the ones coming do look like of a decent quality. Of course, the valuations are something which have corrected quite meaningfully. Even for Swiggy, we know how it's been downsized and the price has come in below 400 rupees a piece. So we'll watch out for that one once it opens tomorrow. But in the meantime, you do have names like Ola Electric and PB Fintech coming under pressure. In fact, Ola Electric, Devang, has come below the IPO price now, and quite a bit of slide on that one. Do you have a view on that?
No, we felt that the two-wheelers and the four-wheelers had a bit of a rough patch over the last 3-6 months. I think automobile went through a very good period, and post that there has been a bit of slowdown, and of course the lot of competition emerging even in the electric side of the vehicles, both in four-wheelers as well as two-wheelers. I think there's probably the next 3 months it will be a litmus test for a lot of the sellers, because when with the festive season we saw a demand again. That demand was not completely towards the sector, but it was towards some individual companies and individual categories of maybe in four-wheelers, some SUVs, and in two-wheelers, certain set of bikes. So, of course, as I said, I wouldn't like to generalize it, but yes, no viewer particular in Ola.
We have disconnected that line with Devang. We'll try and patch that in. But in the meantime, hear out what Horma Sorabji had to say, because Maruti has launched its much-awaited EV at the Milan, event. It is expected to hit the Indian markets come next year. Hear out what his take is on that one.
Well, we've seen the product and we've seen the specs, and I must say I'm very, very impressed with it, impressed with the design. I think what's clear and what sets Maruti apart from a lot of the other local players is this is a global product. 50% of the volume is actually for export markets between Europe and Japan. So I think, and you can really see that even just in the pictures, it is definitely a global product. And, so that's why it's very compelling. It's very promising. We don't know what the price will be. The spec is quite high. So I think Maruti will have a challenge to price it quite low, looking at, the battery sizes. It's got four-wheel drive, the power, all the features that there is in it. So clearly it's catering to a global audience. So it has to have a certain level of spec. But I think it's very, very promising for Maruti. And I think in a way, they may be last to the party, but sometimes that does help, because I think they've been able to iron out a lot of the bugs. And
right. Devang, we snapped that audio line with you, but you were completing your thoughts on what you make of the auto space right now.
Yeah, Aisha, I don't know where I sort of left it.
You can start from the top.
Okay, so I think as I said, I wouldn't like to generalize auto space as such, because we have seen a lot of divergence among the individual companies when you see the festive season sales which flashed on the 1st of November this time. And yes, Navratra as well as Diwali almost fell in the same month. So I think now the monitorable is that whether the November sales and December also stay afloat. I think there are some bit of headwinds which are emerging for the sector, and there is some bit of slowdown when you listen about the inventory build-up and inventory pile up with the dealers as well as the companies. So the sense one gets is one needs to be very choosy and picky. As I said, it will not be generally just thematic now. You have to just pick and choose. So for example, Maruti, after a large correction which is seen from 13,000, 14,000 or to 11,000, should look attractive if someone has a 1.5 2 year type of horizon.
Okay, point taken. So that's the view coming in on some of the auto names. At the moment, we're getting some commentary from Grasim Industries that they're saying that they're not looking at any such acquisition. Remember, there were reports doing around that perhaps AkzoNobel is something that they're looking at acquiring, but seems like there's a clarification that it's coming from the management. For now, the stock is up around 2.3%. The other one which is seeing a bit of a breakout is Vedanta, of course, from the metals pack. Just watching out for that one as well closely. That one too is in focus, up around 2.5%. Kunal, what's your top bet within the metals basket? If at all you're looking at buying any of these names?
JSW Steel is the top one in terms of the price performance. The way the stock has moved up today, even after the initial bout of rally and then the follow-through up move where you saw many of the metal stocks moving up higher, the stock inching up by I think a margin of 4.5 to 5% so far. I think it's one of the strongest name, even in the way the stock had gone through a correction. So there was the point where many of these metal counters had corrected by a margin of 20-25% in the last 1 to 1.5 odd month. I think JSW Steel was one of the few ones which corrected just by a margin of less than 10%, and now the stock is making a comeback to that 1,000 plus mark, which I believe is a very decisive breakout for JSW Steel. Followed by this, I would believe that there could be a bout of short covering which could come back into the likes of Hindalco as well as Jindal Steel. I think both of these stocks are also the more attractive ones in terms of a breakout. From the non-F&O stocks and the commodity themes as such, I think Hindustan Copper, Hindustan Zinc, and even the likes of NMDC. These are the other names which could look very attractive from current levels.
Okay, some metal counters which are looking attractive to trade right now. Just going to refresh my screen and figure out what's holding up in the broader markets. Of course, it's metal counters. So everything from a JSW to SAIL, which are all looking good. There's Jubilant Foodworks, quite surprisingly. That's made a dash of about almost 4%. And then Manappuram as well, which has seen a bounce of about almost 4% coming in. Can't say the same about an AU Small, an Alchem Labs, a Berger Paints, or for that matter, JK Cement. But some of these names are looking quite good. In fact, there's also NMDC, Oberoi Realty, there's Hindustan Copper, Bharat Forge, which has shot up quite smartly, Chola Finance, which is also looking very good. There's an IGL, Coromandel International. All of these names are holding out very smartly. Devang, what is it that you are recommending buying, if at all, in this current market?
I think, yes, what we saw is that a meaningful correction has come after a long time. Every month you used to correct 3 to 5%, and this time at the index level, the large caps have corrected by 9%, and mid cap, small cap again by that same number. But most importantly, the stocks have corrected big time. A lot of businesses have corrected 10, 15, 20, 25%. It's not that you need to buy companies which have corrected 25%, but to specify, identifying a couple of themes in capital goods and consumption, capex and consumption oriented themes. Of course, we've been saying that the banks, again, there has been a lot of divergence amongst the numbers, be it private, be it PSUs, but real money now lies still in companies which are capex oriented companies, like capital goods companies, where sort of even power automation. I used to talk about Hitachi Energy companies like PT Engineering companies like Ingersoll Rand. I've been talking on your channel since last 1.5 to 2 years on all these companies. We again see that after a smaller correction, even in this type of companies, this looks extremely attractive. All these companies, not only on the ROE front, but also on the order book front, on the execution front, on the margin front, are doing extremely well. So I think this type of capital oriented companies, as well as certain consumption oriented companies, retail, a bit of correction. Some of the hotel businesses have also seen some correction. I think a basket of capex and consumption, if somebody has a 1.5 to 2 year horizon, should serve extremely well.
Okay, point taken, but we have you on a bit of a scratchy line, Hemang. We'll let you go. Thanks so much for making time and speaking with us today.
If you like this video, then like, share and subscribe to ET Now.